Right. And even the microphone is on, and the camera is on, and everything is working. We may pretend this is a professional operation for once. Alright, so cool. Hello everyone. Give me a second, ladies and gentlemen. I gotta post to my members that we are on. Because YouTube is discriminating very badly against us Israeli creators, you see. And so they're probably unaware, even though they're all subscribed. So it's kind of unfortunate, but it is what it is. So if you bear with me, ladies and gents, I will post to my community that I am live. Which... Hi, everyone. Now, live. Enjoy me. Yep. Do. Alrighty. Okay, we got that done. Discord community, talk about it later. Blah blah woof woof. Alright, so Casey, as always, you are a beautiful legend. Always first. Howdy, you beautiful legend. Alrighty, so ladies and gents, for those who will be late, bummer for you, but we gotta start. I'm not gonna keep everyone hanging. So no surprise for us, we were kind of prepared for this, and I spoke about this, Casey, as you know, and whoever else is watching already. So what are we to see in the last 30 minutes of the market? 35 minutes are left for today's session before we enter post-market hours. So as it seems, as it stands right now for the 1 minute chart, we're obviously moving within the framework of the current channel, which we just moved into just earlier, about a couple of hours ago. Right now, we're staying within the framework of that channel, given the location and the momentum to the upside that we're having. Ignore this red thing. We're gonna see what it means in just a little bit. Given that we are a little bit more bullish, so although right now it's generating a red candlestick, doesn't mean jack shit, to be fair. It still means that we're most likely, more than anything, are likely to appreciate and continue towards the edge of the current short range channel, the quick one. And so in other words, it's very likely that within the framework of the 13, well, starting to crash and break down right there, but let's see 5 minutes. 5 minutes is still bullish, so there is a presumption here that makes total sense why the market will pick back up again, at least towards the end of the session or maybe in post-market hours, and we're probably going to retest that level that is right above us right here. In fact, that is very, very normal and probable and very likely that we will end up testing even that 7,460 level that we have right there, 01 to be super precise. It seems to be a leftover of a gap, which some of you don't know, but gap levels themselves are not they're not a motive. They are not a mechanism that directly causes the market to move in one or another direction. The gaps are more so a byproduct of the technical support and resistance levels and how the price action ends up moving within that framework. Now, that was not planned. I hope that will be quiet temporarily. All right, good. So 5 minutes. 5 minutes, as we said, we're a little bit more bullish, although I gotta have a caveat on this and highlight a caveat on this with this bullish momentum. It's not really bullish, it's more so bearish, because right now what we're going to get out of this is more so sideways price action. So it's far more likely than anything that we are basically testing this sort of range. Arguably everything else normally works and does work within ranges, and right now we're simply testing that very range. And what we are seeing is, why sideways? Because when our stochastic RSI is signaling bullish momentum, just like here, that was not planned, that's just a coincidence, but basically this bullish momentum right here, even though it's bullish, you got to remember it being below the 20 mark range implies that we are within bearish territory, oversold territory. That either means a change in direction, and now we're becoming bullish, weakness to the bearish side, but that will only be true given the framework we're working within, which will be the larger time frame. If we switch to the 30 minutes, we're going to realize in reality we're far more bearish than we are bullish. And remember, the smaller time frames, I mean, think about it this way. We can have a bullish impulse on a 5-minute scale. In fact, let it last the entirety of 2 candlesticks, 2 5-minute increments, which will appear bullish on a 5-minute chart. But on a 30-minute chart, we're bearish. How is that? Well, if you think about it, you literally have 6 of those 5-minute increments, and so your first 2 could be bullish, but the rest could be bearish. And so the overall outcome will be more bearish than bullish, even though we're going to have at least a bit of a rally, a little bit of a run-up, corrective, upside, but on a broader scheme of things, we're going to end up moving lower rather than higher. Andrew, good to see you here as well. So on the broader picture of things, even though right now we're temporarily kind of hanging around the vicinity of this support level, which we kind of saw play out, of course, given that it's a channel multiple times, right now what we are actually seeing is kind of a retest back to it, and so it's far more likely that we'll end up hanging between that 7,460, as I said earlier, 7,440-ish. So basically an increment of about $20 back and forth. The broader picture, the 30 minutes, is already basically looking into tomorrow. Of course, it does imply the momentum that we're going to enter the post-market with, which may end up generating a gap to the downside, generating a downwards gap, meaning that if we're going to lock up somewhere around here and then open lower because of that tendency that we have and going into the post-market, which in essence still continues to move the S&P at least for a little bit, and if truly that is the tendency we're looking into towards these couple of hours, so guess what? We're going to be seeing probably more so bearish price action in the post-market hours, but it doesn't mean anything because tomorrow morning we can end up, even if opening up around these areas or still correcting back up, irregardless what it seems to be right now, the pull, the direction the market is pulling the price action towards is a lot more bearish, and so don't be surprised if tomorrow's outcome is going to be a lot more bearish, even if not right away, but the broader picture is saying so. But again, that will be only true if our hourly is truly bearish, right? But to not discombobulate everyone and sort of to keep things intact, not to get lost between that change, that significant change of the 30 minutes and the hourly. So, the chart will adjust significantly. So we switch between that 30 minutes and the hourly. We go to the 45 minutes, which gives us kind of more of an incremental change in the direction of that scale of the hourly, basically, that we're going and advancing towards. So basically this 45-minute increment implies to us, at least the moving average that we get on our stochastic RSI based is basically telling us that we are in a broader downwards trend. So even when this will run out and will reach oversold territory, which normally implies the probability of change of directionality, it will not change direction until we'll continue hitting downwards on that broader scheme of things. Hey Chris, good to see that we're basically going further lower. And so this also kind of confirms of the retest of that major level that is residing right below where we are right now, which coincides with our 30-minute range as well, as you noticed, which is simply the bottom of a larger trend range that we're moving within the framework of and have been moving for quite some time. Although I would argue that it's only a quarter of, because the other part is right here. We're not seeing it right now. We're in the upper band, which is also broken down to 2 parts, but basically there's a wider channel here that is at play that you got to know and understand in-depth advanced technical analysis, which by the way I teach, for you to understand the meaning and the importance of these channels. So our hourly, just like our 45 minutes, is very bearish. It does have this potential crossover that's going to happen, but remember, we're right now objectively bearish below the 50, and so although anything between the 20 and the 80 range above, especially around the 50, is more so neutral zone. It does imply directionality, but although when right now we're having a potential crossover, we may think a little bit forward and say, well, if we're looking at the hourly, and that means the following hours may end up crossing over and giving us some bullish momentum. Yes, we just spoke about it. Tomorrow, potentially, we're going to have a little bit of a play to the upside to fill in the gap that will be generated overnight. Or just like today, maybe we're going to see some upside first just to end up resulting in a downtrend. It is merely the ebb and flow of the market and the broader directionality that is occurring while most are blind to it. Now, the question becomes whether we are going to hit out, sort of, bounce back up from that level, which does tend to occur, right? We test the level, we end up having confirm and find it as a support and thus bounce off with bullish tendency, sometimes to test the median, the center level, sometimes to test various other technical levels that we have on our way, sometimes to acknowledge them all via this sort of process, for example. But the broader picture of things, which will be the 4 hourly, which is closer to the 1 day. Basically, we have 1.5 4 hourly candlesticks to come together, combined into our 1 day candlestick. So again, not to lose our senses and track of things the same way we use the 45 minutes, we're gonna use between the 30 and the hourly, again, because the two charts will look drastically different and we're gonna understand how we're moving in that direction. And so the very same idea happens with the 4 hours. The 4 hours basically will help us not to get so discombobulated moving between the hourly and the daily. So if we're going to look at the 4 hours, we are now having convergence of the forces. Although we are in bearish territory and objectively still right now are bearish, this still does imply that we are about to have a corrective, at least to some measure, upwards, upside, bullish movement. Whether it's going to be long duration, no, it does not seem so. It seems like there will be some measure of bullish upside. It's going to be relatively temporary, which means, again, we're going to see why it matters. Between now and the end of the month, we have that the following month, we will see in just a little bit, appears to be moving into far more bearish tendency. The same way that this broader picture, this broader channel was still bullish, within the framework of, as you can see, these red candlesticks imply that we went all the way from this high, which was 7,521, all the way to the low of 7,430-ish range, 30-ish, right? So within a bullish trend, we sometimes have corrective measures, downwards trends, basically temporary, short range, shallow ones, not deeper actual bullish. The difference between this is corrective because it stays within the framework of a bullish trend channel, versus this is actually a bearish channel that will have bullish corrections within that framework. So temporary, shallow, opposite of what we saw on the left side, we will see on the right side. What we saw on the front end, we'll see on the back end. Similarly, so just opposite, inverse. Now, all of this will be positive and will imply that we have an upside trend that is about to occur that is significant, only and only if, as we said earlier, and we switch to our daily, and we find that our daily is either neutral and potentially going to become bullish, or already is bullish. But if our daily, which is a far larger increment and can imply, or rather does imply to us via directional momentum, right? And the increment of time that now we're looking at daily, that means we're not just analyzing tomorrow, we're looking several days ahead at least. So several days ahead, we're already looking towards the weekend. Think about it. We're basically, the trading week is only 5 days, especially if we don't have any holidays or anything. So basically, we're very, very close to end of the week, and we have basically several days, and let's see what these days will tell us that we're going to be. Remember, we can be on a broader picture, on the monthly, be bearish, while within it have several bullish corrective days, right? Pullbacks, if you will, pull-ups, if you will. So daily is actually the opposite of what we were saying. Daily is actually tremendously bearish. So much so that we have, first of all, divergence, significant divergence between the forces. Our slow and fast moving averages, as you know how the stochastic RSI works just right above me, you can see. We now crossed over, as you can see with both values, 48.73, 20. The margin between the two is very significant. The larger the margin, the stronger the bearish trend that is being cooked up. And so on the daily scale, what we are seeing is, in fact, the sort of hint, the smell of a very bearish trend that is about to happen and take place at least throughout an increment of multiple days, potentially, if at least not one very strong bearish day, a handful of very bearish days. So be very attentive to that. We are appearing to be moving in a broader picture of things downwards rather than upwards. Remember what I said, the same idea that we have corrective bearish trends within an uptrend, within a bullish broader trend. We are now gonna be seeing temporarily what we just discussed and saw on the 4-hourly is a temporary relief rally of sorts, similar to what we had right here around the center. There was a crossover, a temporary relief rally. You can see that sort of behavior right here, that sort of significant downtrend and a corrective measure on it to keep things balanced. That just sort of retains the price action within the framework of the current channel we're moving within. And so it's not going to be all that surprising if we're going to end up moving from the bottom of the channel to the top of the channel. And I'm going to clean things up a little bit so you guys don't get so lost. I know I keep on drawing things over things over things. It's simply because I can keep track very easily of what I am saying and what is relevant and not relevant. And that is something you learn to do when working in the industry for a long period of time. Just kind of your eyes filter out naturally what is relevant and irrelevant for the conversation. I know most of you will struggle with it a little bit more, so I'm trying to show and delete things, clean things up. So basically what we're expecting here is some measure of corrective force that will end up retesting that downwards channel that we're building or moving within the framework of. Greg, why do you think it's a downwards channel? Just like I said a second ago, if you look at your broader downward, your daily channel, you're gonna, or directional momentum right now, you're gonna see that ours is very bearish and gonna become even stronger bearish as we progress throughout the following days, potentially maybe even into next week. Now let's look at our weekly to understand whether on our weekly increments, looking at a weekly sort of point of view, meaning the following couple of weeks at least, not just the rest of this week, but potentially the following weeks as such, given the directionality that we're going to have. Remember, if the market is very clearly bearish like so, you can assess that the following days, in our instance, since we're on the daily chart, you can see the watermark behind, right, the daily chart, will mean at least several days of downtrend, because the directionality and the momentum right now is strong downwards. And since we're looking at an increment of a daily, that means we may see several bearish days. Now our weekly is even more bearish. And so that is something, by the way, I've been warning about. And I said, I know that looked like it moves towards convergence. And I warned about this becoming more bearish given the momentum that we saw that was creeping up on the smaller time frames. Remember, the smaller time frames, whenever they play out, they will actually spill over into the larger time frames and will imply what it is to come in the following sessions. Pretty clear. And so, even though we're about to have some level of corrective measure internally, the broader picture is that in the following weeks, you're going to see the price action become even more and more bearish, which is hinting exactly something that I've been warning about. I know that entire impulse was not expected to play out the way it did. It doesn't matter. Although, yes, those who are more familiar with proper technical analysis understand that this impulse normally or far more likely was to appear at the lower stage of that transition. The market right now is bullish enough to allow it, or rather the market makers wink wink, allow themselves to take advantage of another opportunity of people being sort of dumbed down to the, being conditioned enough to be misled and think the markets will appreciate. Some people are buying, some bots are buying, some institutions are buying, and that money was basically scraped off the table by these other institutions who know and understand and actually are driving the market rather than just following the rhythm that they don't even understand, which are the more newer, younger institutions of people who think they conquered the market because they were successful in the last 2 years. Pure idiots, basically. So, and we know probably roughly when that's going to happen. So, given that we have only 11 days visually left for this month, and it appears to me that next month is going to become a lot more bearish, implying the idea that we're about to move downwards, exactly as I've been saying all along, and generate this head structure, part of a harmonic pattern that is a larger head and shoulders that is playing out. And I've warned about this for some time. You can see the sort of drawings diagram that I've placed a while back. You can find me talking about these things months in advance, because as you can see, these things, for example, so we're looking at this on the weekly scale, that means this entire process, us moving within that narrow range. In fact, we've penetrated this arguably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks ago. So yeah, quite a while back. So in fact, several months that we spent in this sideways price action, similarly to what we've done here. And although everybody were sure we're going to go bullish right away from it, I was warning how there will be a major downwards correction, an upside move. And here now it culminates in a broader head and shoulders that will result in us moving roughly towards 6,000, 6,100, give or take. So here it is. I'm playing the warning for the final time. I've been warning about this for roughly about, well, all along, really. Especially, I started very strongly implying that idea around, like I said, a handful of weeks ago, which was around May. As you can see, that we're basically going to end up and culminate with this head structure and going to result in with a downtrend. In fact, I was probably warning about it even earlier, but for the sake of accuracy, of course, go and watch my videos from months ago when I said these things. 3-4 months ago, probably you'll find that I was saying that all along, before it even started playing out, before the curvature even started playing, when everybody was still very bullish. Remember, technically speaking, if you would look at the chart when it was still up to this point, you would think, well, bullish. I mean, look, we've been running bullish then to the moon. But Greg was saying this, and turns out Greg, as always, at the end of things, is far more correct than Greg is wrong, even though sometimes things take a lot longer than expected. The outcome, the broader outcome, the overall result is what I say it is, not because I want it to be. I simply am a translator for the market. So on the monthly scale, we are now moving through a transition that, as we know, given that we don't really have 11 days left, we basically are left with, well, today's over with, let's call it. So we have 1, 2, 3, 4, 5, 6, 7, 8 days left for this month. And within 8 days, we're gonna potentially see a transition that will lead, of course, if not immediately, but within a handful of weeks, just like what we saw on the weekly chart. Think about it, the things are interconnected. The broader market becoming even more and more bearish and moving faster and faster and faster downwards to retest various support and resistance levels we're already very well familiar with, whether it's the channel ranges, whether it's the lower channel ranges that will appear on the weekly, daily, and so on, and definitely certain psychological levels, wink, wink, hint, hint, that we already saw the market testing significantly, like 6,666.66. Yes, mark it in your diaries, mark it on your charts. And I assure you this level will play a role, even if not on the way down. I kind of warned about this. Even if not on the way down, we'll end up sort of ignoring it. There will be a shoulder to be had post this head completion, which can lead up for a retest of these very levels. Giving you heads up, don't say I didn't warn you. So 6666666 will be retested once again, one way or another. Heads up, yes, sure, it will take a lot of months before we actually end up retesting it, probably, if we don't end up testing it on the way down on the neckline, so to speak. Still, irregardless, that level will be retested. I am about 90% certain of it. Even if not on the shoulder, then probably on the way down. One way or another, this level will be retested and acknowledged. That's it, ladies and gents. So again, this is a quick sort of, heads up for the upcoming price action. I definitely want to hear your thoughts for those who will watch this live afterwards. Unfortunately, YouTube is not being very generous with me and kind of hiding my content from anyone and everyone. So I would appreciate if you guys actually comment, like, subscribe, and all that great stuff. Some of you members, of course, know how long I've been warning about this precise price action and how we will end up curving from the top of the ceiling of the channel basically inwards into it, and at least as a bare minimum move on the broader picture of things to 5,700, 5,800 to retest the bottom of the channel eventually, which kind of part of our head and shoulders harmonic pattern. But some of you even know that I'm saying that we're going to go even further and lower. Of course, it will not going to be sort of, this quick movement. It's going to be a gradual process that will take months, if not years, if you will. But yes, eventually the thing will culminate in about a drop to 3,300, and from there, the market will pick back up and will build up a whole new bullish wave. Now, those who want to join the community, I highly recommend you do so as soon as possible because the prices are still discounted. Please do ignore this tier. This is a new tier only for my academy graduates. This is kind of an inner circle type of thing where we're going to discuss current assets, current market conditions, and what assets and strategies should be applied to retain your gains, or at least have some green and some profit, some ROI while everything else is crashing. So for you boys and girls who are not in the community, I highly recommend joining the basic tier to kind of, just $10 a month. Of course, if you do tick that 20% off, you will get to pay only $8 a month instead of 10, $72 instead of 90, and that will give you this full tier, will give you introduced to you to meetings, to various channels that have wonderful content on them that will expand and broaden your horizons with regards to technical analysis, whether it's more basic things, whether it's through my charts and analysis that I provide for my members on a daily basis, discussions, warnings, and so on and so on and so on. As you can see, and I've shown before, I've been warning my members for some time about these things. On weekends, I even share videos of important information they probably maybe want to know. As you just saw a second ago, we have meetings and so on. Now, those meetings, of course, are then kept and saved so people can go back and rewatch them and so on. So as you can see, basically, I've been warning about these things for some time now, right? Basically, for example, this is a post from a month ago that I've been saying, guys, girls, although the market's picking back upwards right now, we're still in a broader downward trend. So don't lose track of things, so on and so on, right? So kind of teaching and guiding everyone. I meet my members sometimes. Damien, shout out to you, beautiful legend, second time around. This is one of my academy students who actually is from Israel, from Israel, and we met, and was great meeting him and having a blast, hanging out and so on. Of course, so I highly recommend you do join that and do with us that virtually. If you ever come to Israel, do let me know. I'll come to meet you as well. That's it, ladies and gents. And of course, there is the Academy tier. I highly recommend joining the Academy tier. The only way to join to the Academy is directly through me. You go to the Discord, which of course you have the Patreon right there on the top. And then you just go to our channel right here, and you have all the instructions of how to become a full-fledged Patreon. In fact, an instructional video and all sorts of fun things. You can apply to the Academy directly, like I just said, or if you're already a Patreon member and you want to apply, instead of seeing these two channels, you're going to see these: the welcome, which kind of, welcomes you, explains the Discord and all that beautiful stuff. And within the support, you're going to have Academy application and support ticket if you need any help or have any questions. Of course, the Academy tutoring is one-on-one, properly, one-on-one tutoring, just like you hire a tutor for your kids on any subject. In this case, I teach you how to analyze the market on your own independently, and you really become your own analyst. You don't depend on me or anyone else in the industry, and you can just analyze on your own, understand where the market is moving, and base your movements and actions based upon what you see and not what someone else is telling you that they see. Being independent. Now, basically doing what I'm doing here, but on a far more advanced level, really, because I teach far more advanced tools and so on, and principles. That's it. Like I said, ladies and gents, I hope to see you in the community. I hope you enjoyed this video. I hope it gave you something. I hope to see your comments down below, your thoughts, where the market is headed, whether I'm wrong, right, and pretty much any thoughts you have about the topic. I would love to see what you guys have on your minds with regards to the markets. Love you all. See you on the next one. Bye bye.